That show Between Two Ferns.
Oh, I love that show.
That's what I tried to do. Behind, in front of a fig tree. Hey everybody, happy Monday. I've got with me Chris Pullaro. He is with Catalyst Tax Management, and he is going to be talking to us about some tax strategies for you as a real estate professional. So thank you for being here, Chris.
Well, thank you for having me.
Chris, I have known for a very, very long time. He is my personal accountant and the one who gives me heart palpitations when I see his name in my inbox at tax time. Okay, I'm going to roll through a list of questions and let the experts speak, but I thought we would just try to give you guys some good information about how to best prepare yourself now for next year's tax season and moving forward too. So, Chris, what do you think is the biggest tax mistake that you see people in real estate make on a regular basis?
You know, as a real estate agent, your lobbyists, the people that support you, at the upper levels in terms of policy within government, have done an unbelievable job for you all as an industry over the last 20, 30, 40 years. You have some amazing tax benefit rules regarding the ownership of real estate, as well as some of the things that you do on a day-to-day basis. One of the biggest things that real estate agents can do in terms of on the tax side is owning direct real estate.
Okay.
But there's a series of rules that you have to follow in order to become something called a real estate professional, in terms of the eyes of the law as a tax status.
Okay.
The biggest thing that you all do is you work in the industry. You're licensed brokers, or your agents, or your management people. Just by the very nature that the fact that you own a license and you go to work and you make money in the real estate world gives you a leg up above and beyond most other people. And you have to meet certain criteria in order to become a real estate professional status. So the biggest thing, if you're interested in tax breaks, is making sure that you hit these components to make sure you're a real estate professional.
Okay.
One being spending at a minimum of 750 hours a year working in the real estate world. Right?
Okay.
So think about it on an annual level. You're a real estate professional. You showed up to work every day. You work 40 hours a week, 2,000 hours a year. As long as you earn, if you work in the real estate area, providing services, and you do at least 750 hours a year. So this could be even a part-time person. It doesn't have to be full-time. You can then become what we call a real estate professional. And that's one of the first steps in being really, really opening up a lot of juicy tax benefits for professionals.
Okay, awesome.
Yeah.
So when you say a real estate, does somebody need to track those hours somehow?
Absolutely.
Okay, and
Yes.
how would you recommend people do that?
Well, obviously, maintaining, employment logs, obviously your employer, whoever, is tracking all of that, but making sure that you maintain specific documentation and accounting of what you do every day.
Okay, good deal.
Super important.
So a lot of people probably are not doing that. So make sure that you can kind of just keep your own records for your own, kind of work, and making sure that you are keeping track of what you're doing on a daily basis. Remember that show? Chris, what's one mistake that costs agents the most money, but they maybe don't even realize it from a tax perspective?
I will get back to not taking advantage of the fact that they are a real estate professional.
Okay.
Status from a tax level. So let's take it one step further. We talked about 750 hours.
Yeah.
Okay. The holy grail, okay, in working in real estate, obviously, is to make an income.
Sure.
But like all people who work, they generate earned income, right? And you pay taxes on that. But if you couple the fact that you're a real estate professional with the fact that maybe you own a personal rental, and if you actively manage that rental, and if you're a real estate professional status, okay, you combine those two together, okay, your real estate activity can become a deductible expense against your earnings that you might make as an employee in the real estate business.
Okay.
Right? So very powerful there.
Yeah.
So owning direct real estate and being a real estate professional status can allow you to create additional deductions against your earnings that most people can't do.
So what Chris is saying is that we should all go buy rental properties.
I will say that if that's important to you,
Yeah.
and if you have the ability to manage those,
Yeah.
you take effectively the real estate, which for most people is considered a passive activity, and I won't get into all the rules of passive activities, but you limit your ability to write off the losses on real estate against your income. But because you're a real estate professional, okay, and if you actively manage your particular real estate asset, okay, that then becomes a non-passive activity. It becomes an active activity, and those losses then can be written off against your earnings. Let me paint an example. Say you're a real estate agent and you gross $150,000 a year, okay, and then you have some expenses, and say at bottom line you net $100,000 a year out of your daily job working as a real estate agent. Okay, that $100,000 is going to be taxed as self-employment tax. You're typically going to pay federal income tax, state income tax, right? And then you're going to pay self-employment income tax. And when you start netting it down, that $100,000 gets dwindled down to maybe $60,000 of what I call net after tax. If you have a rental property, and if that rental property is generating a loss, say that rental property is generating a $20,000 a year loss because of depreciation, acceleration, some other things you do, that $20,000 loss can offset your $100,000 of earnings. So immediately you brought in $100,000, okay, of earnings, cash earnings, but really top line you're only getting taxed on 80. So the power is you're taking a real estate property that you run at a tax loss because of depreciation, and you're offsetting those expenses against your active earnings because you're a real estate professional. Most people can't do that because they get caught up in the passive activity rules where those losses get accumulated and carried forward. You can write those off year after year after year if you own direct rentals.
Awesome. That's good to know. So if you are an agent with us who owns rental property, make sure that you have a good CPA who can help you, take advantage of all of those tax benefits that we have. At what income level should agents be thinking differently about taxes? So at what earning level is there a thought in somebody's mind that says, oh, I should probably do some things a little different?
Yeah, so obviously you want to be mindful of taxes at any income level. You don't want to pay $1 more than what you're legally obligated to.
Preach.
Right. But you should maximize the rules and the laws and understand the opportunities out there. I say typically that anybody who makes more than probably $50,000 a year that they net should start getting a little bit more tax sensitive and start looking at things. Anything below $50,000, there's the way the rules are set up, you're typically paying minimal tax at that level. But when you get from 50 and above, when you get over 100, it gets a lot more serious because you start to every dollar of your income gets marginally more expensive. So typically, you're at $50,000 a year, you start thinking about, the ability to do some things to help alleviate some of those potential taxes down the road.
Okay, awesome. Okay, so a lot of you have your own LLC, some of you have S Corps, and so I wanted Chris to talk to us about the difference between the two and which one we should choose and what are the differences, and just kind of give us a broad stroke lesson on those two things.
So an LLC and an S Corp are typically confused. The reason why you set up a corporation is the number one reason is to insulate yourself from personal liability from your customers or outside entities. That's number one. An LLC is a beautiful arrangement, a legal arrangement that you set up for yourself under the laws of the state to do that. So that's the first thing. The second thing is then becomes what is the tax status that is most optimal, okay? So an S Corp is nothing more than an LLC with a different twist. You basically report yourself as an S Corp. And that S Corp has the same tax advantages as an LLC. The difference is you're changing your relationship from being a self-employed person as an LLC to an employee of the corporation, the S Corp. And when you do that, okay, there are ways to be able to manage your income inside of the S Corp a little bit more efficiently than if you're just a self-employed person.
Okay. And is there an income level that makes sense to do one or the other?
Typically, probably, you want to start thinking at it at probably around $50,000 to $60,000 a year of earnings.
For LLC?
For LLC, okay. Once you get higher than about 60, 70, 80, 90, when you hit 100,000, an S Corp at that time, it makes a lot of sense. Just because of the way the tax rules are written. Because with an S Corp, there are some additional things that you have to do that you don't have to do as an LLC. You have additional reporting requirements. You're now an employee of the LLC. You have to run a payroll. There is an extra tax return that you have to create, right? So things get a little bit more complicated when you're an S corp versus an LLC.
Got it.
And there are costs
Sure.
to those things, but the costs outweigh, or the tax advantages outweigh the costs when you get to about $100,000 a year.
Okay, I've got a fun question.
Love it. Bring it.
What are some of the things that agents try to write off in their taxes that they shouldn't?
Okay.
Like,
It's a good one.
I've heard of people trying to write off their nail appointments, hair appointments, Botox. I've heard a lot of things.
Yeah. That's actually one of the biggest areas of abuse, typically I see in the real estate area. So, clothing is a big one. Okay, people think, oh, I need to be professional, look good, I can write off my suits, I can get, my nails. Jewelry is a big thing, right? A lot of these things are not acceptable. You really can't write those off. The law says is you can write off things of that nature if it's required for your business. So if your agency requires you to wear certain paraphernalia, certain shirts, certain ways to present yourself to the public, that is a deductible expense. Okay? But it has to be required for the job. Wearing a suit or a Rolex is not customary or obligated in terms of your role as an agent. Those are typically not deductible. So you should not write those things off.
Okay. Maybe we should ask Neil if he will require us to wear whatever, Louboutin and Rolex watches. What do you think are some things that people don't think that they can write off, but they actually can?
Well, I mean, a big thing is what I see is there's a couple big things. Obviously, retirement plan's an important thing. If you have as a self-employed person, you've got options, especially if you don't have any employees. One of the big things that I see that people leave opportunities on the table is they immediately go in with, I want to set up a SEP.
Sure.
Which is fine.
And if you don't know what that is, it's a self-employed 401k, basically.
Yeah,
investment.
A pension plan.
Yeah.
Typically, though, you're restricted in terms of how the formula works. You can't put as much into a SEP. I see a lot of single employed person, solo people should do something called a solo 401k. The default always seems to be SEP, but solo 401k actually is a lot more powerful. Retirement planning's big. We talked about the rep status. A lot of people don't understand how to make themselves a real estate professional. Those hourly requirements I talked about. And then taking advantage of direct real estate is a super way that a lot of people just don't understand and don't take advantage of it.
Yeah.
Some people, maybe they just don't want to manage it, they don't want to get involved, but if you are into that and like that, those are some big opportunities that people leave on the table.
You could give agents, we've got a myriad of agents with her. We've got newbies that just got licensed last week, and we've got people that have been in the business 30, 40 years. If you could give them any piece of financial advice right now, what would you say?
Well, I mean, we're getting into areas, of kind of personal financial advice. One of the things I would say is take advantage of the rules, the tax rules that are available to you. Maximize your retirement plan. If you don't have a solo 401k, and you want to put money into a retirement plan, do it. Okay. Try to maximize it. Become a real estate professional status. Own a direct piece of real estate. Take advantage of something called cost segregation studies, which are when you couple that with like maybe an Airbnb type asset, or even just general real estate. They provide tremendous tax benefits to you. We talked about the solo 401k. Another thing is take all reasonable and customary deductions that are available to you. Right? You're a self-employed person, and so the rules with the IRS are you can deduct anything that's reasonable and customary in your business, assuming you're trying to pursue a profit. So that opens up a whole wide range of things that are available. You can deduct, your vehicle expense at certain levels. You can deduct all sort of costs.
Meals with clients.
Meals with clients, yes. There has to be a customary business purpose. If you're going on some sort of, education trip and you're talking business, you can maximize those opportunities. Um, you know, professional involvement in organizations, anything involved in the pursuit, okay, is reasonable and on the table to be able to adopt.
Okay, Chris, last question. What if you had to give a piece of advice of what people, I know this could be hard because people are all over the board with their finances, but what can somebody do to improve their finances in the next 30 days?
Well, obviously you want to put money into improving yourself. Your core engine in being on a professional level is your ability to generate an income.
Sure.
So maximize your education, maximize your ability to create earnings. Once you're in a good spot there, then a lot of it comes down to a kind of accounting and bookkeeping and cash flow management. We're a big proponent of saving. The biggest wealth provider and creator of your future is not necessarily how much you earn, it's the percentage of your savings of what you earn,
sure,
and putting it into asset producing types of programs. Real estate's a great program. I would not advise you to put every single dollar you have in real estate. I would diversify it out. I would put things into the stock market. I would have money, in your personal residence. I would have money,
What about crypto?
Crypto is an asset class, like real estate. It's an asset class. But yes, I mean, think of it as an asset pie. You've got stocks and bonds. You've got real estate. You've got some crypto. You've got your personal residence. You've got these assets that you collect and build over time. The engine is your income,
sure,
right? Your ability to make an income, and your savings rate, how much you put into the pots, is mathematically going to be probably one of the biggest driver how much this pot becomes.
Sure.
So when you think about how much you should save, we're big proponents of saving at least 20% of what you make.
Okay.
So if you make $100,000 a year pre-tax, you should try to save $20,000. It's the old 80-20 rule.
Yep.
80 is living and paying your obligated taxes to the appropriate entities. 20% is left, right? Should be saved.
Yep.
And that should go into a pool of assets. Real estate, direct real estate's a great one. Stocks and bonds, retirement plans, taxable accounts, personal residencies. Okay? The whole idea is to build up your assets, okay, using appropriate leverage, okay, and building yourself more net worth over time.
Awesome. Well, thank you so much for your expertise and
Well,
for being here.
Thank you very much.
And if you guys need any advice or if you would like to ask Chris any more questions, I'll pop his contact information here on the screen. And he's a great one. I would highly recommend him. So hope you guys have a great week, and we'll talk to you later.